it seems to be a bit of a perfect storm for China. I mean, first of all, what we notice in our investor conversations is obviously damage control, and you need to manage the performance and the risks of your portfolio very aggressively. And there's always a risk that a volatility just drives de-risking and you're overshooting. So that's the first starting point. I think like a standard 60-40 portfolio is down more than 10% year to date already. So I think you really got to be careful which parts of your portfolio you have strong conviction in. And people might have struggled a bit with the China picture near term. So there are three things I think people are worried about. The first one is what you mentioned. I mean, certainly recently there has been news flow related to China's involvement with the Russia-Ukraine crisis. So that certainly might make people wary about carrying that risk in the near term. Then I think you obviously had the news on the ADR delisting in the US. So that I think causes concerns just from a flow perspective. And finally, I think, China is dealing with a bit of a COVID wave, and they have the zero COVID policy. And it was originally primarily Hong Kong, but now you start to hear news flow out of China as well. And I think all of that together, probably, if you are already struggling with your portfolio year to date, might cause investors to kind of lower their China exposure already.